Hello and welcome back to your South King County Real Estate Update. I am back with your local real estate news for the week, and it is the very first update of the year. So I'll go ahead and jump right on into these slides. So today is January 6th, 2023, and let's find out what happened this week. It is Blue Friday. I got my colors on. I hope you do too. We are headed into the final week of the NFL regular season. So they'll take on the Rams. They definitely have to win this game in order to make the playoffs. I don't think it's guaranteed that they'll make the playoffs if they do win this game, but they have more of a reason to win this game than the Rams do. So let's hope that the Seahawks come out with a win on January 8th. The last game they did, man, that was a really good game. That was quite a difference in the score, 6-23 against the Jets on January 1st. So let's hope that they can repeat that against the Rams on the 8th. And what happened this week? So this week, Happy New Year! I am very excited to announce so many things for the coming year. There is a lot of stuff in the works for 2023. So make sure to follow, however you're viewing this, make sure to do all the things so you see this in the future. And if you know somebody who's looking to make a move in 2023 or so, make sure to share this channel with them so that they can benefit from all this information. I'm very excited to announce a couple classes. Happy New Year. The 2023 predictions episode is now available, and I thought I had a little clip about the upcoming classes, but there are 2 upcoming classes that are on the books, totally ready to go. Another one that is in the making for February, and there'll be details about those at the end of the show. So make sure to stay tuned until the very end so you can see all those exciting classes. These are brand new classes that I haven't done before, so I'm super excited to bring them to you. So Happy New Year! And make sure to check out that 2022 recap 2023 predictions episode. That is now available on Facebook, Instagram, YouTube, all of the places, my website. There is so much great information in this episode that will be valuable to you if you're thinking about making a move this year. And for this update, I'm pretty much just doing a deep dive into this article as far as the news updates, but I thought it was really important to just address this one head on. Seattle home prices will likely fall in 2023. That won't help buyers. So the new year is here. We know that. And this is going to look very different in the year of real estate compared to last year, and especially compared to 2021. We are done with the bidding wars, the runaway prices, all of that has really just calmed down. There's not as many buyers in the market. With the raising interest rates, that really has just squashed a lot of the demand, which I will address in just a second. But in this article, economists say home prices are likely to fall or flatten here and across the country. The pandemic frenzy is over. As I just mentioned, there are certain places in our area that will see some greater price declines than other places, the East Side being one. They refer to it here as suburban area, but I would consider it urban. The Bellevue metropolitan area has kind of become its own little hub. So I think we need to start looking at Bellevue and Seattle separately because they're similar, but not the same. So calling out to all people that write articles and economists and stuff, break these 2 out. They are so different. But I do think that on the East Side, we will see the greatest decline, maybe in places up like Whatcom County too, where the prices went so far up in the spring, they inflated too much and the incomes in that area cannot support it. So I think we'll see some price declines in that area as well, and similar areas. But to put it more existentially, waning affordability and consumer confidence have negatively affected the psyche among prospective home buyers. And this is true. There's just kind of a general sense of uncertainty heading forward. I am hoping to address that here. So looking forward at 2023, in this article, they say nationally home prices could fall between 4 and 5.5%. Then they say that's according to Moody's, Redfin, and Wells Fargo. Zillow has a slightly more reserved outlook, saying that things will be flat. I'll address some other forecasts in just a second. Seattle area prices could fall further than the national trend, as much as 10%, said Redfin chief economist Daryl Fairweather. Windermere's economist Matthew Gardner suggested a dip of about 5.3% in 2023. So if home prices are going down, can I afford a house? They're saying that if there's a 5 to 10% drop, it's not going to make the region more affordable, just because we're at a higher price point than the rest of the nation. We are in the very top percentage there. They said that the median monthly payment for King County for 2022 was $4,300, $1,200 more than a year ago. Higher interest rates are driving higher monthly payments, and we don't really expect to see the super low rates of between 2 and 4 that we saw during the pandemic. That is not really what we're expecting. We're kind of expecting things to hover around 6% into 2023. So here's those home prices, the home price affordability, the mortgage payments. And King County is at $4,300 this year. Last year, it was right around $3,000. This is assuming a 20% down payment. This data, I think, really needs to be critically looked at, because this varies so much from person to person based on their credit score, how much they're putting down. Each mortgage is different, and it's so personal that this is very much an average, but this seems a little bit high to me personally based on what I've seen, especially if they're putting 20% down and don't have to pay PMI. So here's those mortgage rate projections that I talked about in my 2023 forecast episode. On the average, it looks like we're going to end the year around 6%. If things go according to the way these projections are laid out. Some homeowners could end up underwater. I agree. This is probably true for some. That is the key word here. I am really glad that they put this first paragraph in the article, because if they didn't, I would have some serious issues with how they're presenting this information. Many people buy a home and stay put for years. Barring a crisis like the housing crash in 2008, they likely will have built up some equity when they eventually sell. Everybody's situation is different, but as a general rule, we say if you're not going to stay in a house for 5 years, then renting may be a better option, because there's so many fees that go into buying and selling a home that may eat up all your equity. So you may be better off renting if you're planning to stay in a place for 5 years or less, or at least looking at weighing the two options. So yeah, if you bought a house in February at the peak, February, March, April, we've come down a lot in prices since then. So if you have a reason to sell when you just purchased in the spring, yeah, you're probably going to be underwater. But if you bought it prior to the pandemic and want to sell, you're not underwater. And if you plan on staying in your current home or holding it and renting it out or whatever, basically, if you don't plan to sell, you'll probably come out ahead. Even those that bought in 2007, right before the crash, right at the peak, if they held on to that home, they look like a genius today, because the home has increased in value so much. So if home prices drop 4%, about 6% of recent Seattle area home buyers will be underwater. If they drop 12%, nearly 16% would be underwater. I would be pretty surprised if our whole area dropped 12% in home values. But even the worst case scenario in Redfin's analysis is a different picture compared to the 2008 financial crisis. By early 2013, nearly 1/3 of Seattle area home buyers were underwater. So that even worst case scenario, 12% price drop, that would mean 16% of home buyers are underwater. Worst case scenario, it's still way less horrible than it was in 2008. So keep that in mind. Not the same thing at all. we're not expecting a bunch of people to lose their homes. Most people plan to either stay in their homes more than a couple of years, or if they are planning to sell in the near future, they purchased prior to the pandemic. And we're not going to see a bunch of people lose their homes, because as long as you're comfortable with that monthly payment, that's what matters. Overall, home values rise. So even if in the short term, your home value does go down, if you hold and keep paying your mortgage on time every month, you'll make out better in the end, because the market will come back eventually. So what about rents? Renters have struggled with these rising prices since 2021. Basically, during 2020, they went down, but rents since 2021 have gone way up. They're saying in King, Snohomish, and Pierce County, 10% drop in 2020 and a 21% increase in 2021. So heading into 2022, we were 1% higher than pre-pandemic. And that roller coaster has slowed. We're looking at about 2.5% increase that we had in 2022. So that is definitely stabilizing. That's much closer to what we would normally expect rent increases to be each year. What's happening now isn't undoing the affordability crisis anywhere. We're not seeing rents become more affordable. We may see increases rise, but we're really just not seeing a decrease in rents across the area. It's putting a pause on what's been going on for the past couple of years and making it so real estate owners and investors suddenly are realizing that their investments carry a bit of risk. I don't think that we're on the precipice of undoing anything we experienced during the pandemic. So some investors are realizing that their rental investments are riskier than they thought they possibly were prior to the pandemic, but we're not really on the cliff of anything going horribly wrong. I've mentioned this quote before, but it is one of my favorite. Warren Buffett once said, "Be fearful when others are greedy, and greedy only when others are fearful." And there is a lot of fear and uncertainty in the market. I'm here to try and calm that fear and uncertainty and just share that whenever is the right time to make a move or to purchase your first home, that time is whenever is right for you. It's such a personal decision, but right now, just because others are fearful about what the future holds, doesn't mean you have to be too. And you may even take advantage of a very beneficial situation if you move forward right now, as opposed to waiting for the bidding wars to come back when everybody jumps back in the market. Home price forecasts, just addressing those fears from that article. Realtor.com, they're a little bit optimistic. They think home prices will rise 5.4% over 2023. Ivy Zellman, she is very pessimistic, thinking they'll drop 5.1% in 2023. But everybody else, I think, will be somewhere in the middle here. If they drop, it'll be minimally. I wouldn't be surprised if we saw an increase in home values over the course of the year. And that brings us to our Market Stat Minute. We had 326 new listings in King County in the last 7 days, 319 pendings, and 276 sold. So we did jump up quite a bit in new listings from last week, but the last week was Christmas, New Year's, and that's exactly what we'd expect to see, is more new listings as we get further into the year, followed by more home sales. And for our local area breakdowns, look at Federal Way. There were 4 new listings in the entirety of Federal Way in the last week. That is very low. So that only has one direction that it can possibly go, and that is up. The other areas weren't quite as shocking. 15 new listings, 14 in Kent, 19 in Auburn. But pended listings outweighed the new listings in all of these areas except for Auburn, which had relatively few pended listings and more solds. For Southwest King County, for our monthly update from J. Lennox Scott, we have reached the winter cleanup of unsold inventory and are entering the year with a shortage of unsold inventory up to $750,000, where 89% of sales activity takes place. So overall, we have 1.8 months supply of inventory on the market right now. So we do have a shortage of inventory, and things are very strong up into the $1 million price point, and then things get a little bit more selective as far as listing your home. There's just not as many buyers in that price point at this time. Total difference on our stats to Southeast King County, 1.5 million is the only area that's in a frenzy. Granted, there are fewer homes that fall into this category. So if there were just some really great priced homes, that could really sway the data, but 66.7% of 1.5 million plus going pending in the first 30 days, that is a little surprising to me. So with fewer buyers looking to purchase homes, there are fewer homes coming onto the market, which is leading to the shortage, low level of unsold inventory, especially in the more affordable mid-price range homes. Heading into the spring market, we will increase one level of hotness of sales intensity for new listings before the intensity settles down pre-summer, when we can expect to see a higher number of new resale listings coming to the market. And remember, it's always okay to buy and sell within same market timing. Just real quick, our showing traffic for North America, I wouldn't be surprised if this is the last one of these that they produce, since this is supposed to be a COVID showing traffic chart. We did dip down for the Christmas holiday and are headed up just like we have in prior years. Last week, we had a weekly average mortgage rate of 6.42, but our daily for December 29th, which was the update day, was 6.50. That brings us to today, where our weekly average is 6.48. I just wanted to draw attention to this really quick. The final meeting of 2022, the Federal Reserve raised by 0.5 percentage points, and that was exactly what we expected. There's a chance that we will see smaller increments for the Fed rate raising throughout the rest of the year. But this quote, homebuyers are waiting for rates to decrease more significantly. And when they do, a strong job market and large demographic tailwind of millennial renters will provide support to the purchase market. So my advice is, if you are looking to purchase a home, do not wait until rates go down. Buy now, then refinance when rates go down, because once these home buyers just flood the market again, home prices are going to go way up. So get in now with the lower price, higher interest rate, and refinance out of the higher interest rate when rates go down. That's my advice. And for our daily interest rate, we are at 6.2%. And lastly, our mortgage rates rise has led to a wide gap with the US bond yields. The mortgage rates follow the 10-year yield pretty closely and have for years. But the gap between these two numbers, it's usually around 170 basis points, but between March and October, it averaged about 240 basis points, the biggest gap since 1986. So if we had a normalized gap with the 10-year Treasury where it's at today, we'd be looking at 5.7% interest rates instead of over 6%. I think that this is just a signal that interest rates are a little bit overinflated right now and will come down at least a little bit pretty quickly in the future. So we'll see how long that actually takes for this gap to shrink to where it should be. But I just wanted to throw that in there. I know it's a little bit of a nerdy data point, but this gap really is too big and should be much smaller. Just a quick reminder, I do have the John L. Scott 2023 housing forecast for various areas, my winter buyer and seller guides. If you are looking at buying or selling in 2023, reach out if you would like any of these materials. They're super helpful if you are looking to make a move. The 2022 recap 2023 predictions episode is now available on YouTube, Facebook, Instagram, my website, all of the places. So go check that out. And mark your calendars, Wednesday, January 25th, 6 p.m. and February 7th at 6 p.m. These two are webinars. I do have an in-person class in the works for February, but we're still working out the final details and solidifying those. I am super excited. All three of these classes are classes that are new to me. The first one, Buy Now, Refi Later, is a specific loan program plus a market update, what's relevant for home buyers heading into 2023. The second one on February 7th, home buying for nurses and teachers. This is another virtual event that is a very exciting loan product. You have to be a nurse or a teacher or something similar to qualify for that loan product, but it is a great option, and plans are in place for the 203K rehab loan that I used to purchase my home. We're going to do a class for that as well, and I cannot wait to share that information with you. It was quite a process and a loan product I am a huge fan of. So make sure to stay tuned. If you have any questions, please feel free to reach out. As always, I would love to have a conversation with you about the real estate market in your area or an area you're interested in. I am very excited to bring you this news each week. If there's something that you would like to see included, please let me know. And I will see you again next Friday at 3 p.m. Have a great week.